Good morning, Alan and Tewo. It looks like we are correcting.
Good morning, Chair. Yes, online it's yourself, Zanella Nkomo, Dion George, Skosana, Vessels, Mobiletsa, and Hilos.
Yeah. We should start because the program is quite very tight. If we don't manage it properly, we might not finish. So I think we have to start right away. Sorry. Okay. The meeting is officially open.
Recording in progress.
The meeting is officially open. Let me welcome members of the committee, stakeholders who are here to make oral submissions, and those who have made written submissions, the secretariat and the team that support the committee in general, PBO present here, National Treasury, media. You are all welcome. Do we have apologies?
No apologies received, Chair.
Okay, we're done with item 1. The next item 2, National Treasury, 15 minutes. Who's taking a lead?
Chair is Edgar Sishi from the Budget Office. I'll be leading the Treasury team.
Okay, now Mr. Sishi is 2 minutes past 9, so you have got 15 minutes. So you will present up to 17 minutes past 9 on the dot.
Thank you,
Thanks.
Chair.
Over to you.
Thank you, Chair. I don't know if the Secretariat received our, I hope that the Secretariat has our slides and they can be put up, or alternatively, I can talk to them.
Edgar, sorry, it's Alan. We haven't received your slides. I've made you co-host. If you can share from your side, and then Cindy can just email it through to me.
Okay, very well. My apologies for that. I hope you can then see the presentation. So, Chair, let me go straight to it. So the Treasury appreciates the intention of the Fiscal Responsibility Bill. We understand, and as we've indicated in the past, we believe that the issue of addressing fiscal imbalances is very, very important, and that stronger steps are necessary than the ones that we currently have in the system. However, we believe that evidence suggests that the focus should be on achieving existing policy objectives and improving the performance of institutions rather than adding a this time and at this stage of South Africa's development trajectory. It is likely, in our view, that steps set out in the bill would not restore the long-term health of the public finances. Instead, the bill as currently written could promote pro-cyclicality during economic boom periods and would worsen the conduct of fiscal policy, thereby deepening the challenges of the public finances, as we'll indicate in a moment. The National Treasury is prepared to work with Parliament and the PBO in order to close fiscal imbalances and consider various proposals in respect of fiscal rules. Any fiscal rule must be backed by decisive action to retain confidence and unlock impediments to investment and growth, and government should make progress in strengthening governance in the public sector, stamping out waste and corruption, and turning around key state institutions. And these obligations cannot be replaced, or the outcomes thereof or the consequences thereof cannot be made better with a fiscal rule, in our view, over and above what we currently have. Just some key points on this discussion. As I've indicated, fiscal rules should be credible. They should also consider the macroeconomic and developmental context of a country. If we look around the world, we can see debt ceilings have had mixed results.
Recording in progress.
In terms of their credibility. In countries where there have been some success with debt ceilings, the developmental needs have tended to be a lot less than they are in a country like South Africa, and or the tax base has tended to be a lot larger. One of the challenges in South Africa is the tax base has remained the same, and that we need, from a policy perspective, measures to expand the tax base. We also note the fact that in other jurisdictions, debt ceilings have not been that successful. The European Union, for instance, has departed from its own debt ceiling last year. And of course, as many will know, the US government has consistently breached its own debt ceiling over many budget periods, thus destroying its credibility. And so what we're saying is that the introduction of a ceiling by itself does not solve the fundamental problems. And the fundamental challenges of the fiscus include things like the poor composition of spending, where too much is spent on, for instance, consumption rather than investment, poor composition of borrowing. We're not there yet as a country, but there are countries where over-indebtedness, particularly in foreign currency, becomes a problem. And then, of course, a very important issue is one of implicit debt. Many of the countries that have debt ceilings have been able to violate those ceilings by simply building up accruals or building up off-budget operations. And we consider that in South Africa, if you look at what's happened, particularly with state-owned companies, that problem needs to be fixed. And as long as it remains, there's a very strong incentive to engage in off-balance or quasi-fiscal operations in a manner that would not only wipe out the potential benefits of a debt rule, but may actually make the situation worse than it currently is. And finally, weak institutions. We need to strengthen our institutions, and I'll touch on that in a minute as well in this regard. The 2021 budget does not propose a debt ceiling, but rather a debt stabilizing primary fiscal surplus. So, and that debt stabilizing point is not defined in the budget as a number in terms of the debt. It's defined after which debt must come down. And the specific focus in that regard is achieving a primary fiscal surplus. And what that means is a revenue that is higher than the amount that government chooses to spend, excluding debt service costs. And we consider this the most appropriate approach to restore fiscal health. I'm not going to spend a lot of time in this, but I do want to reflect on some of the challenges that we've had in respect of fiscal credibility that we are seeking to address as part of the budget that we tabled in February, but also through other means, including strengthening institutions. Members will be aware of the persistent deficit, which has become strong in the graph on the top left-hand corner of the slide, and the fact that debt stabilization has consistently been pushed out. And the question is, why has this happened, as reflected in the slide on the top right, over numerous budgets? We believe that a big part of the reason why this has happened has actually been more about economic growth and economic performance. And the underperformance of the economy against growth forecasts, which is reflected in the graph on the bottom left-hand corner, has contributed significantly to the deterioration in the debt outlook. And so the lesson, I guess, from our perspective in this regard is that if you don't address the economic growth problem as a core challenge, we don't consider that adding an additional fiscal rule is actually going to make the fiscal position better, because it goes to the core of why the debt situation has deteriorated the way that it has. There's also an issue around revenue and its relationship to spending, which I will touch on later, which is that the reason why the structural deficit has become persistent is that spending decisions have been made in response to short-term improvements in revenue that have not become permanent. And so linking spending decisions to a permanent increase in revenue is key to restoring fiscal health. Our assessment of the bill, real quick. Firstly, we do think that the bill is currently written, and certainly under current circumstances, could worsen the conduct of fiscal policy. Tying policy to a specific range of debt to GDP would produce significant volatility in fiscal decision-making as things change, particularly because that number, that ratio, is heavily dependent on what happens to the rate of growth and other macroeconomic variables that the fiscus does not control, or fiscal policy does not control, such as interest rates, exchange rates, and the long-term path of the deficit. And that's the second bullet there. The third issue is that the rule as currently written would encourage pro-cyclicality of fiscal policy. And this would be a particular problem when the economy performs well. So at the moment, while we have been in a dip and we have been in a period of poor economic performance, one can easily forget that there was a time when we had a debt to GDP ratio in South Africa in the 20s. And so setting a range could have unintended consequences in the boom period that could be pro-cyclical. It's also not clear to us why that particular range has been chosen, and that's part of the second element in the slide. We don't consider that there's much technical justification for some of the provisions in the bill. And secondly, it's not clear why a 10% reduction to compensation of employees should be the one mechanism to resolve a breach of the rule, or how such a reduction could be achieved. And there are many variables that influence the debt stock, and it's not clear why this one is chosen. And then finally, the coverage of the rules in terms of the provisions, in our view, is insufficient and would not actually reduce the fiscal liabilities by targeting net loan debt and not gross loan debt, for example. This would create an incentive for future governments to game the system by building up accruals. In fact, this has happened in a number of countries around the world where there have been debt ceilings. The government simply builds up accruals and commitments and bypasses the debt rule, or through contingent liabilities in state-owned companies and entities, or by accumulating sufficiently large cash balances in the short term that offset the gross loan number. It's also, in this regard, important to indicate that not only is the rule silent about the buildup of these liabilities and off-balance sheet instruments, it also does not deal with liabilities at the subnational level, particularly municipalities. As I draw towards a close, I do slides here, but I won't have time to go through all of them, and I think I kind of already hit the point of what we're trying to get to. I do want to indicate to members of the committee and other stakeholders that we have considered and continue to work on different kinds of fiscal rules. And this is what I meant at the beginning when I said we are quite ready to have conversations with Parliament and the Parliamentary Budget Office about options in this regard. And this slide just reflects some of the different kinds of options and anchors that have been considered and that we think we could also have further conversations about. Let me move on to also indicate to honorable members that the issue of debt does have a lot of complexity around it, in particular because debt projections are actually very sensitive to many things that are not actually about the spending decisions of government, including, as I indicated, economic growth, the interest rates, the exchange rate. When the exchange rate when the rate of exchange to the rand, between the rand and the dollar, or between the rand and the euro changes, the extent to which some of the borrowings is obviously in foreign currency means that the actual debt stock and the amount changes without any decision being made. And that is a debt management strategy issue rather than an issue of a fiscal rule. We have a spending ceiling. We think the spending ceiling, though it has not been perfect, and as I indicated, it has had problems, I do think that we shouldn't be too negative about it, in the sense that there have been some benefits to the spending ceiling. When we look at the long-term trends in spending growth, we can see that long-term trends in spending growth have actually gone down over the years. Even before the current MTF, we noticed that on average, from MTF to MTF, we actually have been marginally improving our performance in achieving a reduction in spending growth through the spending ceiling. Then let me just come to an end by talking about this issue of aligning spending to long-run path of economic growth and the relationship this has to revenue. As everybody knows, government government doesn't have money. Government spends money that it extracts from economic activity, either through taxes in the present or through future taxation we otherwise call debt, because obviously when you borrow, you have to pay the money back. So that's a form of deferred taxation. Now, when you make a spending decision, you've got to decide, particularly for spending that is permanent in nature, such as, for instance, social grants or salaries and so forth. How are you going to pay for that spending? And the way you make that decision, or put it this way, the way you don't make that decision is by reacting to short-term revenue improvements. And that's part of the problem that we've gotten ourselves into in fiscal policy in South Africa over the last couple of years, is that we implemented things, particularly after the boom of 2005, 2006, and 2007, we increased spending in response to what turned out to be short-term improvements in revenue because of the commodity super cycle and so forth. What you need is a guideline for debt sustainability that says you will not increase spending unless the revenue improvement is permanent, particularly for current spending or for current transfers. And if you have that guideline in place, that can play a very strong role in protecting you from a dramatic fiscal imbalance and fiscal slippage. Chair, I think let me end there. There's one or two other slides here, but I don't want to take up more time. And I think I've made the broad point that I want to make, so I'm not going to go beyond this at this point. We'll send the presentation to the committee if the secretary has not received it. Thank you very much for the opportunity.
You are welcome, Mr. Sishi, for your presentation. If the presentation hasn't been distributed to members, can you please do so, Alan and Tebo? Let's move to PBO. They are also allocated 15 minutes. Now it's 20 past, so you should be done by 25 minutes to 10. Over to you, PBO. Who's taking the lead?
Thank you so much. Good morning, Chairperson. Good morning, honorable members. Thank you so much for the opportunity. We had requested more time. We have quite a long slides, but we'll try to cut it to a lot. But if members will come back to some of the slides that we've raised. I think I'm with the team. I'm with Dr. Mohammed and Mr. Amra, who will do the presentation with me. Our presentation, Chair, we'll just quickly start. We'll start our presentation by looking at the current legislative framework regarding fiscal responsibility and fiscal management. Sorry, I just jumped quickly so that just go to the next slide so that we can save time. Let's go to the yes, the next slide. I think what we start with, Chair, is just to we looked at the current legislative framework with regards to the fiscal responsibility and fiscal management, and say, look, when you look at the constitution, you look at the Public Financial Management Act, you look at money bills, related matters act, there are already mechanisms in there that ought to give guidance with regards to fiscal management and fiscal sustainability. But I think the point here is that the two main points I want to take out of this, in tying it back to the current discussion about the proposed bill, is that first thing which comes very clearly from the constitution, from the other legal law prescripts, is around ensuring that there's clear economic development and mechanisms that address social challenges that are faced by the country, in a way that, being the second point, that any fiscal management and fiscal responsibility ought to be tied back to that, in a sense that you're not going to look at them separately, to say you can't look at budget in isolation of what the purpose of the budget is. So it's very important that when you look at it, you take that into account. And clearly, one of the points why we raise these current frameworks is try to ask ourselves a question that, are we having a rules questions, or are we having an issue of not the current rules being implemented the way they're supposed to be implemented? As a result, it tends to be as if there aren't really rules in place. And of course, like the colleague from the Treasury has mentioned, some of the mechanisms that are in place already. So when we look at that, our suggestion, Chair and members, take into account those current frameworks, and when we process the current bill. I'll give to Rashad to take us through some of the details, and we'll come in later at the end. Rashad, thank you so much.
Thank you very much. So, honourable members, as we know, and I'm not going to spend too much time on this, but this are essentially the provisions in the proposed bill. What's important to note over here is that it requires significant fiscal adjustment in the current year and over the MTEF to realize those goals. And that's what's provided over here to realize the primary balance. Next slide, please. What this provides is a graphical illustration of what is required in terms of the debt to GDP, a trajectory over the medium term. And this is, we assume over here, a very modest primary surplus. And it shows that despite significant effort required, there's still an increasing trajectory over the medium term of debt. And this is essentially the point made by Edgar from Treasury, that it is essentially a growth problem. Not to say that fiscal management isn't a challenge right now, but growth is actually underlying the debt dynamics over the medium term. Next slide, please. Another provision contained in the bill that we want to flag, and that's one of the main provisions, is with respect to guarantees over the medium term. Guarantees have been increasing. Next slide, please. Guarantees have been increasing as a share of GDP since at least the past 10 to 12 years, and that's what this slide shows over here. However, they are expected to decrease as a share of GDP over the medium term. There are 2 points to note over here, and one is, again, touched by the dynamics illustrated by Edgar in the previous presentation, that this is very much a function of certain factors which are outside of the management of the fiscus. So, for instance, in year 2 or year 3 over the MTEF, if growth slows down or GDP inflation is a lot lower, or you have a contraction because of a continuation of the COVID crisis, all of a sudden one then needs to, in terms of fiscal management, revise your guarantees to SOEs, which could be very debilitating and very disruptive to the management of the fiscus. So I think there's 2 considerations over here. One is it's expected to decrease over the medium term, but secondly, the underlying dynamics are not within the control of fiscal management authorities. Next slide, please. What the slide shows over here very quickly are some PBO estimates in terms of what is required to realize the provisions of the proposed bill with respect to expenditure cuts over the medium term. And this is based on the 2021 budget review baselines. What this shows is significant fiscal pressures, fiscal austerity required, especially in the first year, but secondly, in the second year and in the third year. And so whilst this may just seem like a number, in reality, this needs to be considered in the context of significant cuts to the expenditure ceiling that have been proposed over the past 7 years and implemented in the context of the pursuit of stabilization of debt as a share of GDP. That has already affected, and Treasury has been quite transparent about this, the PBO and the FFC have noted this, has adversely affected service delivery in certain respects. Our per capita provision on health and education and other key social services has been adversely affected. And so at a practical level, when it comes to where the budget meets society and the obligations of the state, this is really, really significant. And so in attempting to realize the stabilization of debt as a share of GDP through an arbitrary and unexplained metric, it's going to have significant impacts on service delivery, on the provision of public goods, which may not be socially sustainable, which may not be socially optimal. And second, this also has an impact on GDP through government being a significant consumer and spender of goods and services. Next slide, please. And lastly, this shows PBO's estimates of the trajectory of the primary balance, again, using a very modest primary surplus over the medium term, fulfilling the requirements of the bill. And this shows that relative to what was presented in the budget review earlier this year. Thank you very much.
Sorry, Chair, I was trying to unmute myself. I'll spend the next 3 or 4 minutes going through a few slides. I just need to get to the slide I need. So the first issue I'm going to deal with in the slides is looking at concerns with top-down fiscal rules. And we've looked at some of the kind of what we call at the cutting edge or state-of-the-art academic, but also in practice thinking about fiscal policy and how to drive things. And one of the important things that have come up, and we have a long quote by some of the very preeminent practitioners, policymakers, and also former policymakers and academics, including a economics Nobel Prize winner, where they basically talk about their skepticism of top-down fiscal rules. And we see that the 2008 global financial crisis and now the COVID crisis raises critical questions about top-down fiscal rules. And even though the bill does talk about sort of, temporarily, getting permission not to stick to the rules, I think there are still concerns that you can have constraints and delays in needed action to save lives and respond to economic crisis. The possibilities of future pandemics, climate change, disaster events, global financial instability, etc., talks to the need for more flexibility, and governments require flexibility to be able to respond, not only to act timelessly to mitigate risks, but also to mitigate risks. Government spending can promote stability in a world prone to instability. This was a quote from, or a paraphrase of what that Stiglitz et al. Article says, and I think that's really important for us to look at as we live through this COVID crisis and we enter a third wave and we're not sure what's going to happen in the future with regard to many other risks. And so I think the thinking about the world prone to instability and what role the government plays in promoting stability has to get us to rethink the usefulness and the prudence of using top-down fiscal rules. Also to say that fiscal expansion is associated with growth and with that decreases in the debt to GDP ratio, and that fiscal contractions are associated usually, and this comes from evidence-based research over long periods, but also looking at work related to crisis, what happened with the sovereign debt crisis and other things, and organizations like the IMF and others saying we were wrong to do certain things. There's a quote from the memorandum to the bill above, and it says that South Africa must commit to fiscal sustainability. However, they do not define fiscal sustainability. Instead, it wants to legislate a top-down fiscal rule, but the bill doesn't provide evidence that the rules will ensure fiscal responsibility. And here I think we want to reinforce what National Treasury said, and it's something that immediately occurred to us as we looked at the provisions in the bill, that if we think about debt as a percentage of GDP, there are two variables. Edgar spoke about other variables that are really important as well, but let's just focus on the two, debt to GDP, debt and GDP. These are two variables outside of government's control. The nominal GDP, and as Edgar said, we've seen how it's been difficult for South Africa to predict or forecast GDP, not only the government, but the Reserve Bank, outside agencies, credit ratings agencies have all had trouble with that. And then he spoke about the rand value of the debt, and that's correct, and especially the need, how the exchange rate could affect that. And so we worry that instead of the proposed rules would make government's policy making and budgetary decisions arbitrary and susceptible to exogenous factors. We worry that these arbitrary metrics would force repeated revisions to expenditure, perpetual revisions to the fiscal framework forced by arbitrary metrics will negatively affect efficiency of government programs and ability to plan. The bill doesn't give evidence that large revisions to government spending plans will not increase attendant pressures to increase taxes or further cut government expenditure and reduce the cost of expenditure, that reduce the public wage bill even further. These measures and perpetual changes in government could face significant public opposition from other protests, from labor, etc., but also increase economic uncertainty for investors and others, and so prove not to be socially or politically feasible and further damage fiscal credibility. We worry that South African and global growth could revert back to pre-pandemic lows after the sort of initial recovery or rebound, and we worry that it's going to be a short rebound from the negative impacts of the pandemic and what that's done to growth. So we worry that South Africa's debt to GDP level could be well above the 50% range spoken about in the rules proposed in the bill for a long time, which could mean substantial across-the-board reductions in expenditure over medium-term expenditure framework and well beyond. The rules could curtail growth and lead to worsening of debt to GDP levels, even where government has a budget surplus. And I think this is important. National Treasury has spoken about the need to think to use a budget surplus to keep getting down rules. But one of the things that we do know from the evidence of the last few decades is that austerity, fiscal consolidation, government not spending enough money into the economy has a negative impact on GDP growth and can cause debt to GDP levels to remain high even when government has a surplus. Rules that require cuts to cost of expenditure may worsen labor relations, negatively affect productivity, morale in the public sector, but also could spread into the rest of the economy. The bill fails to provide evidence for service delivery improvement and economic performance if the rules are implemented. I'm going to pass over to our director for the conclusion. Thank you, Chair.
All right, thank you so much, colleagues. Chairperson, these are some of the points you're raising. Some of the key areas of concern, as Raj is saying now, the fiscal rules would make expenditure subject to unknown variables, which are largely some of them outside government's control. The proposed fiscal rule could cause government expenditure to be uncertain and possibly volatile, and negatively affect the planning process. The rules may potentially require perpetual large revision of government, try to adhere to them, possible uncertainty, and could also affect the fiscal credibility as well. But also, I think the asking about the top-down fiscal rules, they need to be thinking how to make sure that you don't just impose rules which are not taking into account the context. But lastly, the issue of fail to show that the potential implication on service delivery and economic development set out in the rules. I think, Chair, there are a lot of slides we had, but we can go back some of the issues that we wanted to raise. We just gave you some of the key issues the committee should consider. Thank you so much for the opportunity. Thanks.
Thank you, Dr. Chanchis and your team. Would have liked to receive more information. It's just that, as you know, parliamentary time is very, very limited. We have got sessions this afternoon. Thanks. Let's move to 4, COSAT 2. What time is it now? It's 25 to, so by 10 to 10, you should be done. Over to you, Comrade Matthew.
Okay, no, thank you very much, Comrade Chair, and good morning to honourable members, colleagues. Yes, no, thanks for giving us space as COSATU to raise our views on this bill, and we think it is an important debate to have, so I think we must welcome this debate. Chair, look, I think as introductory comments, the way the bill is currently drafted, we are forced as COSATU to reject it. We might have some useful objectives around tackling the national debt, which we would agree with. We have to tackle the national debt. But we believe the current wording of the bill, in essence, the proposals are to dump the bill for corruption, for state capture, for wasteful expenditure upon the very nurses and public servants who keep the state afloat. We think such an approach, honestly, Comrade Chair, is shameful, and we fear it would, in essence, collapse public services. We do agree with the Honourable Hill Lewis, the drafter of the bill, the sponsor of the bill, that we need a debate on public debt. We agree with that, and we think that that kind of a debate would be helpful. We could, as a nation, agree what items need to be cut, what items shouldn't be cut. But also, Chair, the debate needs to include what are the real causes of the fiscal crisis, and we are in a fiscal crisis. And those for us are the issues of the billions of rands we lose to corruption and wasteful expenditure every year, the billions we lose because of mismanaged SOEs, the billions we lose to tax evasion and a stagnant economy. So, Chair, for us, we also need to state, because it's not just this bill, we've seen this tendency, other bills as well, that bills affecting workers have been drafted away, which we believe is unconstitutional. Chair, the Constitution guarantees workers the right to collective bargaining. But there's no attempt to engage in collective bargaining in this bill. What it does in effect is to collapse collective bargaining because it will compel by law the state to impose very brutal wage cuts upon public servants for the foreseeable future. And as COSATU, we have to oppose such a flawed, unashamedly anti-worker provisions. And thus we would call upon Parliament to reject the bill as is currently drafted. Chair, where we would appreciate the bill's objective is about the national debt. I think as COSATU, we must be deeply alarmed by the national debt and deficit levels, and especially, honourable members, the rapid growth in the levels of the debt. This is something which must concern all of us. The dangers, I think, to state the obvious of a rapid rise in the debt levels is that we will enter a debt trap in the next 2 years or so if it's not brought under control. The consequence of us entering a debt trap, Comrade Chair, state not being able to pay what it is due to pay, is that we will go to the IMF or another institution for a bailout. And the conditions as COSATU, we believe such a bailout would be devastating, not just to public servants, but to workers, the working class in general. To state the obvious, public servants would lose their wages, they would lose their pensions and jobs. SOEs and public services would be closed or privatized, the workers dismissed. I think you would also see a huge impact on the economy where public spending would come to a halt. And this will choke a very fragile economy and stall it when it most needs to recover from the deepest recession in a century. So our proposal on the national debt issue, Honourable Chair, is let's have a sober national debate on the appropriate debt levels. What cuts can we and can we not afford? But what we don't see, not just in the bill, but in the debates of the past 2 years and on the whole wage bill, is a populist attempt to mobilize a party base of any party or to appease the very wealthy CEOs of companies, business leadership, etc., at the expense of very poorly paid nurses and cleaners. We think that doesn't help us at all, Chair. Chair, the bill speaks to conditions of employment of public servants. And again, public servants have the right to collective bargaining on the conditions of employment. We have the Public Service Coordinating Bargaining Council, which is a creature of statute, and all conditions of employment are meant to be engaged upon there. We equally have a NEDLAC Act passed by this Parliament, which requires bills affecting labour market issues to be tabled there for engagement. But this has not happened. And it's not the first time that a bill has been drafted where these collective bargaining provisions have been ignored. Chair, so for us as COSATU, and this is a huge issue for unions, that any attempt to collapse workers' hard-won rights to collective bargaining, to impose brutal salary cuts upon workers through legislative fiat, are unacceptable. And in fact, Chair, there would actually be a recipe for labour market strife. If workers feel they have no platform to engage on the issues, then what is the opportunity? Where do they raise the issues? And that creates unmanageable tensions. Our proposal is that any such bills, chairs, as per the Constitution, the NEDLAC Act, etc., the LRA, they need to be engaged at the table and engaged at the PSABC and other relevant bargaining councils in the state and NEDLAC as required by law. Chair, I think, look, the heart of the bill, besides the debt, is the issue of the public service wage bill. But we feel that the bill doesn't or ignores the real cause of the fiscal crisis and the debt. By having a sole focus on the public service wage bill, it implies to the reader that the wage bill is the sole cause of the fiscal crisis and it's the sole point of intervention needed, because the bill doesn't speak to any other issues. I think, Chair, the wage bill has been relatively stable at 35% of the budget since 2009. And sure, one could argue that the budget has increased in deficit levels, but the wage component has been stable in that regard. What we've seen, Chair, is that the headcount increased in 2008 as the state needed to fill critical posts like teachers and nurses and doctors and police officers. But overall, the headcount ratio has plummeted since '94. We had 1 million public servants to 34 million citizens then. Today, we have 1.2 million, so 20% growth versus 60 million citizens, which is almost a doubling in the population. We also have seen in the past few years an annual decline in headcount of at least between 1% and 2% every year. Chair, and this headcount decline is collapsing in a significant way the state's ability to provide quality public services in schools, where the teacher-learner ratio is rising, in clinics and hospitals, where nurses and doctors are filling 2 or 3 posts in effect each, or in police stations, where we've seen a decrease of 7,000 personnel over the past year. Home affairs, where you have 2 staff, we should be having 7 staff manning the queues. Chair, we think also it's a false debate to compare public and private sector wages. The private sector employs 800,000 farm workers, 800,000 domestic workers, almost 500,000 mine workers, taxi drivers, retail cashiers. The state does not employ such categories. In the state, you have doctors and nurses, teachers, police, correctional service, military personnel. So you cannot compare these two, they're far different. What could be useful to compare is the salaries of doctors or teachers in the public service versus the private sector. And there you will then find that, in fact, in the public sector, they're paid less than the counterparts in the private sector. We also feel that the bill is silent where it should have made a voice on the exorbitant packages paid to politicians, political office bearers, nationally, provincially, locally, to management, not just in the public service, but in the public sector, the SOEs, etc. And there's no proposals about reducing them. So we do need to have a debate about the wage gap. In the public sector, 13-1. In the private sector, where business is crying about the wage bill in the public service, it's 33-1. Just to make one example, and this is going to apply to other sectors too, but in the banking sector, the big 5 banks, each of them earns 150,000 Rand every single day of the year. Their cashiers are lucky if they even get 1% of that. It's the same for the retail, for mining, for financial services, etc. Ironically, Chair, these companies are listed and most of them are beneficiaries of public sector workers' pension funds, the PIC monies, which are invested in them. Chair, I think we also are in a danger of ignoring that we have 40% unemployment levels. And as people lose their jobs, they become increasingly dependent upon their relatives who are lucky to be employed by the state and have stable jobs. So there's no one who is isolated from the economic pains, including public servants. Chair, our fear is that this approach of a wage freeze and what the bill says a wage cut will spark a brain drain of skilled public servants from the state, further collapsing public services. So you would see doctors and nurses moving to the Gulf, to Canada, where they get paid far better, no stress. You would see teachers moving to the private sector, less stress, better pay. We also have to say, unfortunately, Comrade Chair, that public servants, like all South Africans, especially working middle class, are highly indebted. So slashing the wage bill, for example, if the debt levels are 60% by 10% per annum for 4 years, will make it impossible for those teachers to pay their loans. This would have a huge impact upon banks as well. So, Chair, our proposal, Kosato, is that let's have a debate on the wage gap in the public and private sector. Let's look at legislation to tackle it. And there is a companies amendment bill currently in NEDLAC, which will compel the private sector to disclose their wage gaps. Let's hope business will embrace that, since they're so keen to discuss the issues of wages. Chair, we'd also want to say we need to slash, not just to freeze, but slash the salaries of political office bearers and management across the state, not just in the public service or in cabinet, but let's include the SOEs and entities. In ESCOM, you have 800 managers making more than 2 million rand a year. SABC, the very people who are retrenching workers left and right, those executives make more than the president. Let's have a single collective bargaining process for the entire state and a single wage regime structure for the entire state. Because right now we're only focusing on the 800,000 public servants. We're ignoring the other third of the state, which falls outside the public service regime. Chair, I think we need to tackle, as we get towards the end, the real cause of the fiscal crisis in the public debt, which is the billions lost to corruption and wasteful expenditure, to tax and customs fraud and evasion, to mismanaged SOEs, and to a stagnant economy, which we see companies closing, workers losing their wages and jobs, and thus neither are able to pay the taxes or spend in the local economy. And for us, Chair, if we want to get the state back into a sound footing, and we would agree with the comment by Treasury earlier, those are the issues that have to be tackled. Going the easy, lazy route of bullying public servants doesn't address the fundamental causes, and we'll be back in the same crisis every year if we don't address it. Chair, other proposal we have with COSATU is that Parliament, the 5th Parliament, passed a very progressive Auditing Amendment Act, which empowers the state to hold personally liable financially offending political office bearers, management, and officials. Only one person has felt the brunt of that progressive act. So let government start utilizing it. I think when people see the consequences of the misbehavior, it will start changing the culture in the state and society. Let's have a single online public procurement system for the entire state, and let's get the public procurement bill to NEDLAC and to Parliament quickly. Let it be bold and progressive to attack those issues, because that is the real sieve of looting in the state. But Chair, I think we also need to see the existing ban on public servants and political office bearers from doing business with the state, that ban be extended to the national provincial leadership of ruling political parties and to the spouses and children of all politically influential persons from doing tenders with the state. We know politicians don't like that, but Chair, to be honest with you, that is going to benefit politicians because it's going to keep the children out of the drama, and we'll not have to have constant articles about politicians, children and wives, etc., getting the minister into trouble, etc. But we need to send a correct message to the public that we are serious about corruption. Equally, Chair, we think we need to resource the commercial crimes courts and for the law enforcement and judiciary to prioritize corruption cases. The last two slides, Comrade Chair, is that we need to see clear turnaround plans tabled at Parliament for these SOEs. Bailouts are not a sustainable business model. We need to have competent management in place of these SOEs. I think we need to support and further to reinforce the good work being done by the new leadership of SARS to tackle tax and customs evasion. And of course, we need to ramp up the economic recovery plan, local procurement infrastructure, other economic intervention and stimuli commitments. So in conclusion, Chair, unfortunately, there's in this bill, what we see in the actual bill, the 10%, the 5%, the wage freeze on the conditional employment, is that we're in effect going to dump the bill for state capture and mismanagement on nurses and teachers and police officers and cleaners. It's not going to assist in addressing what needs to be done to fix the state and the economy. It doesn't address what is the appropriate level of debt and what is the best route to get there and over what period. And we fear, Chair, that as it's being processed now, it's going to undermine our labor legislation. So hence we want to reject it. Chair, I think lastly, look, we don't question the bona fides and the correct intention of the member for drafting the bill. I think we welcome that bill. We saw yesterday the honourable member did draft a statement in response to our submission, saying that this is not what they had called for. Unfortunately for us, Chair, as COSATU, we can only comment on a bill. A press statement doesn't have the standing of a bill. And when a bill is passed into law, the minister will be guided what's in the act, not what's the intention or what was the motive, etc. So if the honourable member wants to redraft the bill, include other issues, address our concerns, we'd be happy to have the debate. But as the bill is currently structured, Comrade Chair, all we can see is that it will throw the public servants under the bus, and that's not something that we could defend or agree to. But thanks very much, Comrade Chair, and I hope I've kept to the time frame. Thanks to honourable members.
Thanks, Comrade Matthews. You have kept to the time that you have been allocated. You know yourself from COSATU and Sharon from SAICA. You understand the rules much better because you are almost part of us. Let me hand over to Sharon Smulders from South African Institute of Chartered Accountants. Sharon, you know I don't have to emphasize time. 15 minutes, I think it's...
Yes, I'm getting better. I'm getting better.
Yourself and Matthew, you are almost here, so you know the rules of this conversation much
Yes.
better than anybody else. So over to you. You should be done by 7 minutes past 10.
Perfect. Thank you, Chair, and thank you. Good morning, honourable members and speakers. As you know, the need for the bill, I think all the previous speakers have said, you know, we have a problem in South Africa. Our annual debt service cost payments will exceed government spending on the most important functions, as Matthew just highlighted: health, economic services, peace and security. It's unsustainable. So the need for the bill is definitely there. We need to stabilize our finances. We need to ensure government is committed to prudent financial management. I'm going to touch on a few of the technical issues very quickly so we can get to the crux of the matter. The first thing, there's 3 definitions that were defined in the bill, but not actually used in the bill. So that just needs to be looked at. We also do comment on the extra budgetary government institution. I think this might answer one of Edgar's concerns. It seems that this bill then would be applicable to all levels of government and public entities and enterprises that are engaged in significant financial activities. And this will then obviously limit the scope for shifting financial responsibility off budget. So if we go into the important part, which I think is the fiscal rules, as we've seen internationally, there's 2 ways of treating this. You can either have principle-based fiscal rules, or you can have mandatory targets. Now, this bill has gone with the mandatory targets option, setting certain debt to GDP levels, as well as government guarantees that cannot be greater than prior year guarantees. Now, we're not economists, so I'm not going to all the things that the PBO and National Treasury went into, so we're looking at this more holistically. But the 50% net loan debt does seem reasonable if we look at other developing countries. The budget surpluses are necessary to reduce debt. That is without saying we have to, then that has to be mandated. We've got to return to budget surpluses. How do we do that? Well, we've got to reduce expenditure. Now, in this regard, we need transparency to ensure that the expenditure that is reduced is in the right places, that essential spending on strategic projects is not jeopardized. Same with the compensation. Again, this cannot be done across the board. This has to be based on performance and service delivery needs. It cannot just be a set reduction, similar to what Matthew mentioned. If we look at what New Zealand is doing, and this is quite important, should we have budget surpluses, that surplus needs to be tendered for by the different departments and municipalities, etc. And this directs spending to strategic projects where the need is actually required. And it also promotes good competition and collaboration amongst the different departments to ensure that if we have, for instance, a water problem, everybody that needs to fix this water problem across the different government departments levels actually happens. Now, for internationally, what we've seen, and as has been mentioned before, is that these mandatory targets are not always effective. And there are ways to overcome this, though, that have been mentioned in the academic literature. And obviously, public or political will is number one, and I'll chat to that a bit later. But 2 other things that are necessary. And number 1 is transparency. And the second one is good principles or good procedural rules to ensure that these targets are met. Now, if we look at transparency, South Africa has been ranked #1 in the Open Budget Survey. And we really do need to congratulate National Treasury on that. Our budget documents and the forecasting, etc., that has been included in that is really, really of an impressive. It's it's recognized worldwide. So congratulations on that. Keep it up. It's awesome. However, transparency is not enough to ensure fiscal responsibility. And that's an important point to note. You do need certain procedures that back up this transparency. And one of them, for instance, is forecasting. We have raised before our concerns about the optimistic forecasting in the budget reviews. And obviously this optimistic forecasting leads to certain expenditure trends, and that expenditure invariably exceeds what is budgeted for. And if our revenue is not what we expected, the expenditure way exceeds what we can actually afford. Also, we need accountability and consequences for non-performance. And as you just look at the Auditor General reports, we clearly across the board, both in the public and private sector, do not have proper accountability and consequence management for non-performance in respect of these laws. We also need reporting of expenditure. At the moment, our municipalities and etc. are reporting on the modified cash basis, not the general recognized accounting principles. And this also leads to certain inconsistencies and creative accounting. And that's something that would need to be addressed if this were to work. The budgets must also be aligned to the compliance performance levels and strategic projects. And this is critical to ensure that our outputs are budgeted for and that there is a link between the outputs and what was budgeted for, and ensure that service delivery is actually achieved. One of the important things that this bill allows is an exemption from these rules, and that's if the Minister of Finance actually applies for this exemption in a specific year and he can give a good reason why he didn't comply with it. And obviously it has to be recommended by the Standing Committee of Finance and ultimately approved by the National Assembly. Now, this kind of undermines the purpose of the bill. It creates a very low threshold and seems very easy to get out of if you don't meet this particular target. And if we look at public procurement, it seems quite easy that non-compliance is the norm. And if you have a very low threshold, we tend to stick to or go below that threshold. So if government is really serious about ensuring fiscal responsibility, we need to ensure that this bill is actually binding and more difficult to get out of. And we do suggest that a legislative process be put in place to ensure that it has to be approved by Parliament after having public hearings. Also, there is a reporting requirement on the minister that annually has to report on the compliance with this bill, and also if he didn't comply, the reasons for non-compliance and what his recovery plans are in this regard. Now, again, there's no time limit imposed on this of when does this need to be achieved, and we do think that a time limit does need to be imposed on these time limits proposed. Now, given South Africa's poor performance on the compliance with laws and regulations, the bill will be ineffective if there aren't proper enforcement measures. Certain countries have introduced penalties, sanctions, some have introduced incentives to achieve these measures. Others have been more punitive and included a reduction of salaries for the ministers, etc. Some countries, I think such as Colombia, has even included bankruptcy rules for the municipalities and asked their municipalities to get credit ratings from the private companies, which was quite interesting to read. But again, if these sanctions are not actually applied automatically, it will be very easy to get out of this particular bill. So what are we basically saying? Well, the success of this bill depends on political commitment. This is a big commitment in terms of this bill, and unless government is all in, this is just another act that will be enacted, and there'll be non-compliance. Non-compliance will be reported on, and so will carry on year on year. As has been previously mentioned, we currently have so much wastage. We have non-compliance. And if we can fix those things, we then could address these particular factors. But without political will for this bill, it's just going to be another administrative burden, taking costs and times where we should be focusing on what the actual current problems are. Again, we need proper processes backing up this bill. Without that, the bill also has no hope of succeeding. We need parliamentary scrutiny, which this bill does provide for, so that is good. But I think also most importantly, we need limited escape clauses for the minister to get out of this and corresponding government officials to get out of it. It's going to be difficult to comply with this, to get out of complying with this particular bill. And then obviously we need credible sanctions and enforcement of this bill for it to succeed. But the problem is if our country does not take our own initiative to ensure fiscal responsibility, and that can be seen, if we could be doing this, the Auditor General would be having nothing to report on at this stage. We need to fix what's already there, as mentioned by the PBO. There are various other acts that are there that should be ensuring this enforceability, but that just hasn't been acted on. So it is in our own hands. Government has to take initiative of this, because if we don't, this will be imposed on us. It will be imposed on us as a country, and as Kusatu pointed out, this will have dire repercussions for all of us in the country, and it will come at a far greater cost to every single one of us as the citizenry. So this is up to the government. They've got to make the decision, but this bill will not succeed without proper political will. The government has to be all in, otherwise there's no chance that this is going to work. Thank you.
Okay. You finish ahead of schedule, so you spared us almost 7 minutes. Thanks, Sharon. The next presentation, Alan, you said business leadership essay is not here, isn't it?
Yes, Chair, they've got conflicting schedules, so they won't attend.
Oh.
The Free Market Foundation is here.
Okay, they can send their written submission. And then Free Market Foundation, they are now here. You indicated earlier on that they've lost a senior manager. Condolences to Free Market Foundation and to the family of the member that they have lost. Our sincere condolences as the committee. But it looks like they've sent somebody to represent them now. As the member logged in, Alan?
Yes, Chair, it's Chris Hutton. He is online.
Okay. Chris, are you there?
Yes, Chair, I'm here.
Okay. No, over to you. We have also conveyed the message of condolence to the Free Market Foundation and to the family's member who has passed on.
Well, thank you, Chair. We greatly appreciate that. Our fellow colleague Perry Feldman, he was the project manager on our Kaya Lum land reform project. So he's a big loss to us and to the country, but we'll see what we can do going forward. But thank you very much, Chair, to you, to the members, to the fellow organizations and individuals making presentations this morning. The FMF is grateful for the opportunity to comment on the Fiscal Responsibility Bill. I just have a few comments. Hopefully, I won't take up too much of the committee's time. Just a bit of context. So in 2020, the South African GDP contracted by 7%. The economist Mike Schuessler points out that the real economy grew at an average of 1.2% annual rate for the 10 years to 2019. So in our view, the incorrect ideological and policy decisions before the COVID-19 pandemic and lockdown caused much damage to the economy, the middle class, and people's prospects. However, there exists an opportunity to implement responsible and sound government behavior and expenditure, allowing for the private sector to breathe, grow, and create jobs. In our view, being fiscally responsible means understanding and taking the appropriate actions that will ensure an environment that encourages increased wealth creation, as opposed to one where the greater focus is on how to redistribute an ever smaller cake. It is imperative for future fiscal stability, responsible government spending, and the country's very prospect for meaningful growth that current debt and spending levels be substantially reduced over time. Given the country's junk status credit rating, the government must be seen to take responsible steps now. Lucanio Mnyanda, the Business Day editor, explains that even within that non-investment grade sphere, there are degrees of junkness, and that has real consequences for the price SA is charged to borrow in financial markets, and this affects how much money is available for education, health, and other services. The FMF supports the Fiscal Responsibility Bill, strongly believes that it should be enacted, and further will take this opportunity to recommend additions to the bill that could aid its intentions of putting the government on a more fiscally sound path forward. In terms of the burden of public sector wages, we will say here that the greater the proportion of the economy that the state controls and the more regulations and inhibitors there are on economic activity and job creation, the more people are forced to rely on the state in both direct and indirect ways. South Africa has around 1.3 million public servants, and their ongoing wage battle with the state is arguably the most important matter for the government to resolve if it is to arrest its increasing downward fiscal slide. It is not on them, it is not on their shoulders that the state has decided to spend more on other projects and grand aims at increasing state control. But unfortunately, the public servants are now in the difficult position where the state is ongoing in this wage negotiation battle. We believe that the South African state-owned enterprises and the debt that they currently hold, especially Eskom's 4.64 billion at the time of our comment, I believe this has been cut down by about 80 billion in the last year. The debt of the SOEs is one of the biggest burdens on the fiscus and the state, and ultimately the South African citizen. Ultimately, taxes are increased in different ways, and the citizen has to bear those costs. According to the United Nations Conference on Trade and Development, foreign direct investment flows into South Africa in 2020 almost halved to US 2.5 billion from US 4.6 billion in 2019, a 15% decline. Without proper foreign direct investment, South Africa's economy and state will not be able to grow enough. We will not have good economic activity and good job creation, and ultimately citizens will suffer more. In a nutshell, without serious capital investment and formation, nothing really happens on the ground. Social compact and plans and summits mean very little without the capital to implement and realize them. Capital formation can entail the building of a new factory, the sinking of a new shaft for a mine, or even setting up a call center or small corner shop. All of these demand first that the long-term economic future of the country is relatively clear and understandable, and further that erratic government behavior in terms of policy and taxation won't hit businesses out of the blue. A comment on accountable fiscal management, just a little bit here in terms of the Constitution. Sections 213 to 230 of the Constitution provide what the Constitution demands from government in terms of fiscal behavior. Section 215 provides, and I quote, "National, provincial, and municipal budgets and budgetary processes must promote transparency, accountability, and the effective financial management of the economy, debt, and the public sector," end quote. While good that such expectations form part of the law of the land, this particular bill, we believe, can give substance to Section 215. As pointed out by Peter Attard Montalto, Head of Capital Market Research at Intellidex, it is important that when the country does have excess cash and budgetary surpluses, that these be used to reduce debt levels now and to lower the risks of redemption of bonds at the start of 2023. The need to flatten the yield curve through better debt management strategy is a public good in and of itself to reduce the crowding out effect of banks lending to the private sector. We also believe cutting down debt now is morally responsible in terms of the burden that we will leave on future generations if we are serious about them having good lives, good quality of life, and a good chance at economic activity and job creation. We do not believe that the state should impose great debt burdens on the future children and grandchildren of South Africa. And just a note to close, the FMF supports the spirit of this bill and believes that if enacted, it will set government fiscal behavior on a relatively more stable, economic growth-friendly path. The Foundation wishes to take this opportunity to recommend the following additions/suggestions that could strengthen the bill and lead to more sound government fiscal behavior. Number one, any excess surplus funds must be returned to citizens through tax rebates. Number two, empower municipalities and ensure they are more responsible for their long-term behavior. Provincial and municipal governments must ensure that their main budgets are balanced at the end of every fiscal annum. Competition between municipalities will spur better governance and delivery of services, as well as the potential of losing ratepayers to other more attractive and better run locales will encourage that provincial and municipal governments improve their financial standing and professionalism. Number 3, any and all borrowed funds must be ring-fenced for specific purposes with concomitant deadlines and appropriate levels of expectations in the event borrowed funds are not used for specified purposes. And number 4, the increasingly long list of SOEs must be whittled down. Those of greatest national importance, such as Eskom, must be limited in their scope and provision of services, allowing the private sector to deliver better price services to those citizens who choose to buy from them. Finally, just in conclusion, the benefits of fiscal responsibility accrue over years and decades. And while the temptation is to keep on spending ad nauseum in the interest of appearing to do something, that temptation must be resisted at all costs. Fiscal prudence can act to both rein in spending on all manner of projects and further indicate to businesses and investors of all shapes and sizes that the environment in which they want to operate will not be stifled by the insatiable hunger on the part of a big spending state in future years. If government wishes to play a reliable role in citizens' lives and to help improve their lives in a responsible manner, it must make the necessary difficult decisions now to rein in unnecessary spending. Providing an element of welfare and social assistance for indigent citizens is something that can be supported and must happen, but it can only exist in a consistent, reliable form if government does not continue to try and bail out all SOEs currently on the payroll. I will close on that note. Thank you very much, Chair, and to the committee for your condolences, and thank you for the opportunity to comment on this bill.
Okay, thanks very much, Chris, for the presentation. Members, now we are in item 8, discussions. We are allocated 45 minutes, then responses. Okay. Alan and Tebuho, you will assist me in identifying members who would like to make comments.
Chair, can I just ask a process question?
Okay, Mr. Honorable Lewis.
Thanks, Chair. I just want to check, will there be an opportunity for me to respond to the presentations or is it now only for other members?
We'll allow you like we did with Dr. George, because you are the one who initiated the bill. Yes. There were lots of things that were said, and I think you have a right to reply, Louis, don't worry. We live in a democratic South Africa. I can hear that others were pouncing you and you were feeling hot where you are. So I will allow you space. So let's allow other members to come in. Then I'm not sure whether you will want to come at item 8 or you will want to come after at item 9, when we'll be done with responses. But you can make comments for now, but as you are the one who initiated the bill, I will allow you space at item 9 before I close to make some comments. Let me open up for other members to make comments and ask questions. I see there's Honorable Vessels, there's Dr. George. Okay. Akbar Vessels, over to you.
Thank you, Chairperson, and thank you for the submissions and the comments by the various stakeholders. It is a very important piece of legislation and a very important bill and a very important debate and discussion to have. Chairperson, we are in a situation where we are in trouble, and I think even National Treasury admitted to that, obviously our government debt is out of control, and we have a situation where we are on the fiscal cliff, and that is an unsustainable situation, and something needs to change. Thinking needs to change, and we can't continue doing the same over and over and expecting different results. Chairperson, I hear what National Treasury also said, and I understand the fact that obviously we need to spend money to create economic growth. And I also understand that if there's no economic growth, we will stay in a fiscally unsustainable position. But on the other hand, it is also true that if we do not spend, or if the fiscus is in trouble, and if spending does not occur to actually stimulate the economy, and we can argue that that has been the case for many years now, where money was spent and state expenditure was not aligned to actually create a conducive environment for the economy to grow. One example is capital expenditure, where money was not spent on infrastructure projects as it should have been, and especially in creating infrastructure for businesses to be able to invest and to grow and to create employment. But money was spent on other priorities. And that is why the question I want to put to National Treasury is, whilst I understand that it is difficult to say that expenditure should never be more than the income, because if there's no growth, then the state revenue will be low, and we can't be in such a position. But why can't there be a curb to say that if expenditure is higher than the state revenue, than the income, then that difference must be equal to capital expenditure to ensure that we have the responsibility, and government has the responsibility, to spend money on the items and the projects that will create economic growth. And we have not seen that in the past few years, and that's why we are in this situation. So we must have some kind of fiscal responsibility curb to say that government cannot spend and continue to spend money on items that are not aligned to actually be conducive for economic growth. We need a curb to say, if you spend more than you earn, if you have to borrow money, then that should be to grow the economy and should be to invest in capital expenditure, and obviously then also curb all corruption and exploitation that goes with the few infrastructure projects that we have had in the past. Chairperson, that's my comments and my question to Treasury. Thank you.
Thank you, Akbare Vessels. Dr. George, over to you.
Thank you very much, Chairperson. Yes, I think, as for the reasons put out by Honourable Hill-Lewis, I think that a bill of this nature is absolutely vital at this time of the development of South Africa. I can understand the technical arguments that have been put forward by Treasury, and I think that the difficulty with those arguments is that South Africa is unlike the other countries that we have been talking about. Now, firstly, it is highly unlikely that Treasury is going to be wanting to have any additional rules that to work within. The reason why they wouldn't want to do that is because we know it is extremely difficult for the Treasury to hold government to account. As has been stated before, is possibly, unfortunately, one of the biggest failures of the National Treasury has been its inability to hold government spending to account, not on important matters such as infrastructure and social support, etc., for people who need it, but on the enormous amounts of wasteful spending that have happened. For example, on the state-owned enterprises that were envisaged for a completely different reason, for development, etc., and spectacularly failed. And all they ever did was to suck the money out of the public purse and actually make everybody poorer. And so I think that is the most crucial aspect in terms of looking at this bill, because the Treasury argues many technical arguments, which many I don't believe fit properly into South Africa, given the nature of our history and our economic trajectory, etc. But Treasury is saying that it wants to improve the performance of the institutions rather than make debt rules. Now, that sounds like a really noble thing to be saying, but practically, history shows it's completely unable to do that. So as much as I would really want Treasury, and I hold them in very high regard, to be able to successfully do that, I don't believe that they're able to do that. And I don't think anybody does either, because unfortunately, that kind of spending just never stops happening. And what this bill is actually a protection for poorer members of our society, because what the bill says is, do not go and spend yourself into unsustainability by, for example, propping up completely failed, corrupt institutions. Rather, make sure that there is, in fact, enough money to pay for those social services for people, to make sure that the people on the front line of service delivery have enough, there's enough money to pay them proper salaries, rather than wasted on the millionaire managers who have no value to add, etc. So I think that context of the bill, it is a pro-poor bill. And I do think that from a technical perspective, obviously the many arguments by the Treasury, they have got validity. But the fact of the matter is that for the position that South Africa is at the moment, a comparison to those type of economies doesn't actually work. We are a unique country, and we need unique solutions. And I firmly believe that this bill is one of them. Thank you, Chair.
Thanks, Dr. George. It seems those are the two comments from the members. Alan, are there other members whom I don't see on the screen who might have raised hands?
No, Chair, no other member raised his or her hand.
Okay. If that's the case, we are at 8. Let's move to 9. Then after that, I will allow Honorable Louis to respond. Are there responses from those who have made inputs?
Chair, I believe there was a question that was asked of us from Honorable Vessels. Can I come in?
Okay, you can come in. Then I see Comrade Matthew has raised the hand. Yeah, Mr. Sishi, over to you.
Yes, thanks, Chair. Thanks for the questions. So I think on the issue of financing solely focused towards economic growth, if I understood Honorable Vessel's question properly, this is a long-running debate and is an issue that is well written about in the literature. The idea that you should limit borrowing to, for example, infrastructure and not allow borrowing towards current spending. Indeed, it's been a discussion and debate here as well, and in the Treasury. The question, though, it seems to us, is that before you get to that, to answering that question, you have to have the right, or the certain kinds of policy decisions have to be made, including certain political choices have to be made. So, for example, do we consider education, which is dominated, of course, by the salary of teachers, to be a form of investment? How do you treat that? How do you choose those priorities as a government? And in South Africa, if you look at the structure of South Africa's budget, most of South Africa's budget doesn't really change from year to year. If you look at the budget, it mostly stays the same from one year to the next. Most of the money, more money is spent on education than on anything else. That's always been the same for a very long time, and that never really changes from year to year. The second largest amount of spending is on social development. That doesn't really change from year to year. And then the third is health spending, and that also doesn't change from year to year because it's considered a core requirement of government delivery. In fact, it's considered constitutional. And so how we think about what is an investment for growth in the medium term versus growth in the long term is really a set of political choices. So I would argue, in answer to Honorable Wessels, that we can, there are ways of linking financing to things like infrastructure. For instance, one can issue only infrastructure bonds. You can do that, which force you to only spend that money, that borrowed money, on an infrastructure project. And that's something that we have looked at and continue to look at. So those things are there. But it seems to me that on the big stuff, on the big ticket stuff, it does come down to the political choices that have been made around what actually government should be delivering and doing. And that drives a lot of the spending decisions and not the other way around. To the question asked by Honorable George about building institutions and holding government to account and whether the National Treasury has failed here. My answer to that question would be that the point that I was making is not that it's the National Treasury alone that should be building or fixing institutions, or building or fixing the behavior of department. We do, after all, have a whole government. As Kosato indicated, we've got an Auditor General and an audit bill act that gives specific powers. We've also got law enforcement institutions in the country that have specific powers to enforce the law. And I think that when we look at the landscape of capacity to enforce the law and to ensure that people that steal, that waste money, that engage in maladministration are punished and are held to account, I think that the issue of lack of capacity is broader than just saying the National Treasury has failed, because these institutions ultimately are not Treasury institutions specifically. Thank you.
Mr. Sishi, are you done with your input, or we have lost?
Oh, yes, I'm done, Chair. I'm sorry, I'm done.
Okay, I thought you have a connectivity problem. Okay, that's the response. Comrade Matthew, and then Dr. Siraj.
Okay. No, thanks very much, Comrade Chair. And I think just to one quick response to Honorable Dr. George. So I think we appreciate what Dr. George has highlighted about the DA's broader proposed reform of the public service wage bill, and the statement the DA had released about where they thought they could make cuts in the wage bill. And you know, when I looked at that proposal by the DA, not the one in the bill, but the broader statement, there was many issues there that actually, as Kosato, we've been calling for some time, to reduce the amount of management posts in the state, to reduce the packages they receive. You know, what the Dr. George calls the 29,000 plus millionaires in the state. That one we agree with. What they've also mentioned there about protecting nurses and teachers, police officers, cleaners, etc., from inflation, that's also a sacrosanct principle of COSATU. But unfortunately, those are not in the bill. If they were in the bill, we could be having a different discussion, and perhaps it'd be useful to put them in a bill, because then you would find that there'll be appetite for those kind of ideas. I think, Chairman, other things that we've also raised proposals, COSATU, about can we not utilize the government employee pension fund to help struggling public servants to access affordable home loans? And of course, can we have a single wage regime for the entire state? Our difficulty, Honourable Chair, is that the bill only says cuts the total wage package by 10%, 5%, or a 0% increase for 4 years, depending on the debt levels. And when that would go to a Minister of Finance or Treasury, it wouldn't be accompanied by any statement, and they would just apply it across the board. And that would be, for us, the fundamental problem. But I think lastly, Comrade Chair, I think we do appreciate the debate, and we need to have a broader debate about what is needed to be protected in the budget, what needs to go, and what are the key principles. But thank you, Comrade Chair.
Thanks, Comrade Mentu. Dr. Siraj Mohammed, over to you.
Thank you, Chair. Thank you for the opportunity to respond as well. I just want to, one of the points I wanted to make is the same as what Mr. Parks from Kasatu was making, was that, you know, if there are concerns about, you know, the public wage bill and also inequality within the public sector wages and efficiency and productivity and those kinds of issues, and also within state-owned companies, you know, the existing rules should be used, maybe new bills should be suggested, other rules, regulations, but the using this kind of rule for fiscal spending that impacts on government expenditure is a usually blunt instrument that may not actually get you the results you want and may actually increase problems within the public sector and instability within not only public sector labor markets, but the rest of the country's labor markets. And so if the also similarly, if the concern is corruption and wasteful expenditure, and this wanting to rein in expenditure and to stop those kinds of things, again, it's a blunt instrument, and those things should be tackled directly, and the tools should be. And for me, the really important thing to understand is that within macroeconomics and particularly fiscal thinking and fiscal policy, government expenditure and how the decisions made around it is hugely important, and it's used as an instrument for redistribution. One of the inputs was spoke about intergenerational equity, and it's within the Moneyballs Act as well. But how do we think about issues like intergenerational equity and leaving a burden of debt on future generations, particularly when government's policies are, to promote redistribution are dealing with for instance, the pandemic, the increases in poverty and unemployment linked to that. And so the problem of people suffering is a current one, and it has to be dealt with. And one of the ways you deal with that is by spending and possibly, if necessary, taking on debt as an investment in your future and your country's future, so that the current generation can be active economically and promote a system where you can actually have growth that can support payments for the debt and taking on more debt and dealing with that. And so thinking about the intergenerational equity includes thinking about the current generation, not just future generations, and thinking about the current suffering that we have, especially now as we go into a new wave of the pandemic. The Honorable Vessel's question, I mean, I think the answer from Edgar from National Treasury was a good one. I just want to add that, you know, we need to be really careful in thinking about government and government budgets and fiscal policy in similar ways we think to households and in similar ways to businesses. And this kind of golden rule notion that, you know, if we are going to take on debt, that it should just go to capital expenditure is something that needs to be considered. And I think what Edgar's example of social expenditure, particularly education, is a really important one. Economies are part dependent. The money we invest in our children and young people today is going to shape their futures, but also the country's future. The future entrepreneurs, the future financiers, the future billionaires are going to be shaped today. And what government does and how government spends will be really important in that, and government support. And so this kind of a notion of a golden rule is something that we really need to reconsider. I think I'll stop there. Maybe if there's time later, and there's a need to come back in, I will. Thank you, Honourable Chair.
Thanks, Dr. Siraj Mohammed. From my side, I don't see any other member or official who will want to make any comment. Okay. If that's the case, Honorable Lewis, are you there?
I'm here, Chair.
Okay.
Can I go for it?
Yeah, let me give you 10 minutes to respond to all the issues that have been raised.
I'll do my very best. Thank you very much, Chair. Let me get straight into it then, because I've written lots of notes. Well, it's a very freezing day in Cape Town this morning. You've seen all the Cape Town people sitting with our jerseys and scarves on, but fortunately this meeting has been nice and warm and sometimes even hot. I've put my hands on the screen to...
We are not coming back.
You're not coming back. It's better there. Okay.
Okay.
Let me start by saying that I really appreciate that actually, while some people have opposed the bill, actually no one today has opposed the spirit of the bill and the intention of the bill. And that is to get debt under control in South Africa. And we accept that, everyone basically accepts the premise that debt currently in South Africa is unsustainable and is an existential threat to our economy and to the livelihoods of South Africans, and that it has to be brought under control. And I think that's a great starting point. And we've had a really excellent debate. I enjoy the debate, and I don't mind the criticism at all. I welcome it and want to engage in this debate. Let me just start from the beginning and go through my notes. So let me start with National Treasury and Mr. Sishi. Let me say that National Treasury has often stated, ever since I joined this committee 2 and a bit years ago, has often stated that we need stronger fiscal rules. But it has itself not brought any of those rules to committee or to Parliament. And that's really where this bill originates, because it has been talking about this so long, but has not made progress in actually delivering those rules. I remember the very first budget speech that I heard Minister Mboweni deliver in October of 18, which is when I first joined this portfolio. That he said that South Africa needs what he calls fiscal anchors, and Treasury is often referred to fiscal anchors. And this is a proposal for a fiscal anchor. Treasury has spoken about many others, and I'll come to those in a while. But it is the only one that is actually on the table. So some of the criticism I take with a pinch of salt, because no one else has really done anything about this, despite having spoken about it for years. And so here is a proposal on the table. Then, he says that about fiscal credibility, that there's a constant departure from the debt ceiling in the USA. I would just draw his attention to the fact that my bill does provide an escape hatch, but importantly, it allows for parliamentary oversight over and for a proper legal process over that escape hatch. And that links with what one of the other presenters has said. But let me just say, Mr. Sishi, on credibility, that there is already very low credibility on Treasury's adherence to the very weak fiscal anchors that it does have. We have constantly overshot and failed to adhere to our spending limits year after year. And that is why we are in the position we are in now, where we have totally unsustainable debt. I also don't like the explanation that we have this debt crisis simply because of economic performance, because what you're doing is essentially shifting blame from the government, from the state, and from yourself as Treasury to something outside of yourselves that no one can really control, the economy. Of course, our economy is underperformed, but that ignores the agency and the responsibility of the National Treasury itself. For example, in approving bailouts or presenting budgets with steep deficits year after year after year. So do not only blame economic performance, also hold up the mirror. I don't understand the concern that you raise about pro-cyclicality. You say that South Africa was once in a position of having 25% debt to GDP, and my whole objective is, let's figure out a legislative way to get back to there. Surely that's what we want as a country. Then there's huge fiscal credibility, there's huge confidence in our economy. We can regain our investment credit status, and that can contribute to growth. So that is the whole point, is to get back to that position. Why have I chosen cost of employment? Several rows, because it's the cost of employment is no longer the elephant in the room. It is the elephant in the elevator. Our fiscal space has shrunk so much, and the size of that elephant has not really shrunk. So it is now the elephant in the elevator. And it's the biggest, it's 40 cents, 47 cents in the rand of government revenue is spent on this one item. And as we know, it's the fastest growing item over the last decade. It has to be dealt with. And because there's no line item, and this goes to what Mr. Parks was saying, there's no line item in the budget for corruption. If there was a line item, we could just cut it out and then all corruption would cease. But we have to control what we can control. As someone has said, the police and the prosecuting authority must be capacitated to deal with corruption, but you can't just take a pen and scratch through it. That's outside of our powers. What we have to do is control what we can control. You say that the bill is silent on accruals. That's true, of course. It doesn't deal with accruals, but so is National Treasury, with respect, Mr. Sishi. What is National Treasury doing about accruals? Accruals are accruing, if I may use that term, by the billions every month around the country in every provincial government. And this is something that we've discussed again for years with very, very little action. You then discuss other fiscal rules, and specifically in your slide, you mention a debt limit as one of the fiscal rules that you are considering. Now, I would put it to you that a debt limit is a far more blunt instrument than a debt ratio cap that I am suggesting, because a debt limit puts an actual amount, a rand value, on the total debt stock that the country can have. When you have a ratio to GDP, of course, if GDP is growing, then your debt stock can grow. So this is not a bill that seeks to ban the government from lending any more money, or borrowing any more money, as someone has suggested from the PBO. This bill actually contains an implicit incentive to grow the economy, because if you grow the economy, then your debt to GDP ratio by definition comes down because the denominator is going up, and therefore you can borrow more. So that is an incentive, and it's less blunt than the debt limit that you are proposing in your presentation. Okay, I'm thrilled that you recognize debt as deferred taxation. In fact, I should say we should rename debt in the budget to future taxation, because that makes it clear that every rand of debt has to be repaid by future taxes paid by South African citizens. And so there is this fallacious assumption, and I want to Mr. Wessels and Dr. George made this point, referencing the Treasury argument, and I want to address it now. There's this fallacious argument that if we don't spend money through debt now and Dr. Mohammed, rather, excuse me, is the biggest proponent of this argument. If we don't spend money now via debt, that the money will not be spent. That is fallacious. That is not true. If we accept that all debt is future taxation, then if we don't borrow now, that money will still be spent, except it will be spent by private citizens at a later time. And they are far more efficient and wise at spending their money than we are, if I may say so. Okay. Finally, Mr. Sishi criticizes fiscal policy, says that fiscal policy is partly to blame for where we are today. I would ask him the question, who is in charge of fiscal policy, sir? It is not us in this committee, and it is not the public out there, and it is not the economy at large. It is you and the National Treasury. Okay, then let's go to the PBO. Dr. Janchis, Dr. Mohammed, and Dr. Amra. Yes, it would require significant fiscal adjustment. That's the point. I don't think that's something to be avoided. I would just draw your attention to the interaction between our debt crisis and our growth crisis. Part of the reason our economy is not growing is because there's very high perception of debt risk and debt unsustainability, which manifests itself in junk ratings. And if we could bring down our debt and bring down our debt service costs, we would improve confidence in the economy and improve growth. So those two are strongly correlated. They are not independent of each other. We cannot, again, you blame growth for our debt crisis. Of course, it is true that our economy is not growing as fast as it should. That is beyond debate. We must grow much faster. But again, I say we must control what we can control. The alternative is that we throw our hands up in the air and say, "Oh well, it's not our problem. We'll sit back and keep borrowing until growth returns." That is not an option because our debt stock is not sustainable. On guarantees, I would say that the state's projections for guarantees have been wrong every year. I attach very low credibility to those projections, and I do think that guarantees should be cut and withdrawn from state-owned, failing state-owned enterprises as a matter of some urgency. We absolutely can and should withdraw those guarantees, because ultimately, what benefit has the public derived from those guarantees and those bailouts over many years? I would argue that they have derived little to no public benefit whatsoever from those guarantees. Dr. Mohammed, I take it as something of a compliment that you have mobilized the extraordinary, illustrious Professor Stiglitz in opposition of my bill. I am a huge fan of his and respect his writing very much, of course. And I totally accept the point that you make that in the context of a responsible, depoliticized fiscal management environment, then you should not have these top-down rules. But we do not have those contexts or that context. The purpose of this bill is to depoliticize debt in South Africa for every government, not just for this government, but for every future government. Debt should not be a tool of political budgeting. It's just far too dangerous for that. It should be, we should take the sting and the teeth out of the debt debate entirely by legislating it responsibly. You bemoan the fact that there's no evidence of service delivery improvements in my bill, and you say that it might affect morale and government may face pressure from labor. I would say to you, Dr. Mohammed, that these are really inappropriate concerns for the public, for the Parliamentary Budget Office to raise, because those are totally extraneous to the objects of the bill. We are dealing with a bill about debt, not about what public pressure the government may face if it supports my bill. Let me come on then to Kusatu and Mr. Parks. Thank you, Mr. Parks. I very much appreciate the commitments that you have made on the unsustainability of public debt. Again, it seems that everyone in South Africa across the ideological and political spectrum now agree that our public debt is unsustainable and must be addressed. Let me say that it has never been our intention to cut the salaries of nurses and teachers. I know better than most how underpaid nurses are in South Africa because my mom is a nurse. We actually are the only political party in this country which has made a solid proposal to protect CPI inflation-linked increases for frontline staff, nurses, teachers, social workers, police officers, and so on, and focus the cuts in the public wage bill on the so-called millionaire managers, those 29,000 people in the civil service who are not specialists, they're not covered by occupation-specific dispensation, OSD, and they earn more than 1.2 million rand each. There are 29,000 of those people, so that is where the cuts should be focused. We've done a detailed costed presentation and proposal on this, which I know that you have seen, and which we re-released yesterday in response to your statement. But no one else, not the government. The government has pursued a blanket freeze approach. We have always said that we think that this is irresponsible and harms frontline service delivery staff and is far too much of a blunt instrument. We should be looking after our nurses more than anyone at this particular time, but also our teachers and police officers and so on, and focusing the cuts where there is real room for cut. I've made the point there's no line item. I agree with your point that corruption and state capture are also huge contributors to our public debt. But as I said, we can only control that which we can control. There's no line item for state capture in the national budget. If there was, we would have removed it by now. You have obviously attempted to redefine this debate on public service wages, and I understand why you've done that, but I would just make this point to you, sir. If you truly represented the best interests of your members at large, it's a no-brainer that you should support getting public debt under control as soon as possible. The reason we are having cuts to the public wage bill now, which you have strongly opposed in the bargaining council, the reason we are having those cuts, Mr. Parks, is because debt is unsustainable. We are spending more and more on debt service costs each and every year. It is the fastest growing item of our budget. Next year, it will be bigger than our total budget for health, bigger than our total budget for education, more than triple what we spend on police, and more than 5 times what we spend on national defense. Just interest on our debt. So it is in the best interest of the public sector to get this under control now. Otherwise, future cuts to the public wage will be much, much larger, much more painful. And most importantly, will not be up to us. They will be imposed on us by others. And that is an outcome that we should all regard as totally unacceptable. And we should do everything possible to avoid that outcome while we still can. So I understand why you have redefined the debate around public wages, but this is a debate about debt, Mr. Parks, not about public wages. And I'm saying to you that it is in the best interest of every one of your millions of members to get debt under control now, before the cuts and the pain is much, much greater in the future. And the only reason we are even talking about cuts is because we have allowed this debt situation to get out of control over the last 15 years. I'm coming slowly to the end, Mr. Chair. Give me a couple minutes. Ms. Smilders from SAICA, thank you. I think that your idea on tendering for budget surpluses that you've got from New Zealand is a superb idea, and it is one that I will read more about and perhaps speak to you about. And perhaps that is the basis of some future work that we can do in this committee. But I commend it because this is the kind of new thinking that we need to solve our crisis. What really does disappoint me about the thinking from the PBO and from Treasury is that we seem to stumble forward in South Africa in crisis. Our economy is in junk status. We have a critical crisis of confidence from the investment community in our economy. Our debt is unsustainable, but we are not yet engaging in the kind of creative new thinking that Ms. Smilders has brought this morning to say, how are we going to get out of this? How are we going to recapture the confidence of the global investment community regain our investment status and save this economy. Instead, it's really just about tinkering and finding fault with these proposals. I don't like that. I think that we should be much more proactive and ambitious in our thinking. Let me just say, you've criticized the escape hatch in the bill. I understand why you criticize it, but I'm a big believer that the bill must have an escape hatch. Just imagine if we had passed this bill in December 2019 without an escape hatch, and then COVID hit us, we'd be in a real problem. I mean, there are times when governments around the world have to take on much more debt. It's simply unavoidable. And last year, 2020, was definitely one of those years, probably the greatest example in our lives that we will ever see of such an example of governments having to take on huge additional debt really to save lives and keep the economy open. So there has to be an escape hatch, Ms. Smulders, and what I've done in the bill is to say that needs parliamentary approval. And this is where I really want to empower our committee and empower Parliament to give it real teeth and oversight over debt sustainability. But I don't mind the proposal that you have made on public hearings. I like that proposal very much, and we can include that. But I want the power to lie with SCOF, with this committee, and not with the Treasury. And that is what the bill provides. Business leadership has not attended today, but I did read their input, and I appreciate their support for the bill. I won't respond to the specifics since they have not been here. Again, Mr. Hutton from the Free Market Foundation, I appreciate your support. I just want to underscore what you have alluded to and which is very much a purpose of this bill, and that is the concept of depoliticizing debt in the budget cycle. Debt is too dangerous. It's like the kind of nitroglycerine or the crack cocaine of budgeting. It is far too dangerous to leave it in the hands of any elected government. And I don't mean any disrespect to our current government, actually. I mean this for any elected government. One day when I and my colleagues in the DA are in government, I will believe this just as strongly as I do now, that we have to depoliticize the control of debt because its consequences are so profound for the economy and for the public. And the reason the world's economies are currently so awash and drowning in debt is precisely because far too few places have removed the teeth from the debt debate. Dr. George and Mr. Wessels, I have replied to what you've said. I just want to underscore this idea that of future taxation. All debt is future taxation. I really love that comment by Mr. Sishi, and I'm going to propose that we rename the debt line item in the budget to future taxation, because that money will still be spent, and it will be spent by private citizens and far more efficiently than the state will spend it. There's no private citizen in South Africa that using their own money would ever have bailed out SAA to the tune of 60 billion rand. Yet government has forced the public to do that through future taxation and debt, and that's deeply inefficient and unacceptable to me. Okay, let me just close by saying that Dr. George made a superb point, and I think that's where I'd like to close. If we get debt under control, we protect the poor in society. And that is the ultimate purpose of this bill. Again, this year we are cutting 2.5 billion rand from the police budget. We are cutting hundreds of millions from the education budget, hundreds of millions from the health budget in the middle of a health crisis. Nearly every frontline service in this country is having its budget cut. The reason for those cuts is nothing else than our debt bill. Debt is absorbing a larger and larger portion of our budget, and that is having profound consequences for the people who rely on these basic services each and every day. You and I, with our expensive medical aids, Do not rely on the public health system to save our lives. But we should always keep at the front of our minds the hundreds of thousands of nurses who work in that system every day and the millions of patients who rely on that system every day for life-saving healthcare. Their budgets, their healthcare is being cut because of debt. And each of us should be ashamed by that. This is where I have sympathy for the arguments made by Dr. Mohammed. I don't agree with him, but I do have sympathy with the idea that there is an element of austerity in the sphere of basic services in South Africa. And that is unacceptable. But the reason it is happening is because of debt. So let's get debt under control. That is the most pro-poor thing that we as legislators can do in South Africa. And protect those poor South Africans from any further budget cuts, and see their budgets for basic services increase in the years ahead. And one way we can do that, one important way, it's not the only way, but it is one important way, is through the introduction of a statutory fiscal rule, which this bill proposes to do. I thank everyone for their support for the principle of the bill. I take the criticisms, and I hope that we can take the bill forward and improve it and get it passed so that we can protect those South Africans ultimately. Thank you, Chairman.
Thanks, Honorable Lewis, for your responses. And I've also learned a new expression, elephant in the elevator. I haven't heard of it before, so I think it's an innovation. So it means it's very tough once the elephant walk on the elevator. So thanks for your responses. Alan and Tebucho, are there announcements before we adjourn the meeting?
Tomorrow we'll be having deliberations on the financial sector laws bill that was presented last week in public hearings.
Okay. Okay. No. Thanks very much, Tebucho. Thanks, honorable members, for attending and participating. Also want to thank the stakeholders who made the presentations, written and oral presentations or submissions. Also want to thank PBO, who are part of Parliament, also the Secretariat and the entire team that support the committee, the media and the public at large, those who might have attended our meeting or those who are in attendance of our meeting. The meeting is adjourned. We'll meet tomorrow again. Thanks.
Thank you.
Thank
so
you,
much.
Chair.
Thank you so much.
Siyabulela Noxim.
You.